Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 9th. Initial jobless claims came way higher than expected. The previous one was 183,000. We were expecting 190, and we got 196. So, way more people than expected is claiming jobless initially. It's the first time they are claiming jobless. Continuing jobless claims was also higher, way higher than expected and higher than the previous one. We were expecting 58 and we got 88. So there's more people initially claiming jobless and more people also continuing still being jobless. So that's what the Fed wants. And that's super important to understand because Fed wants the economy to cool down, and more importantly, they want consumer demand to be controlled, to be cooled down, and also labor market to start seeing unemployment going higher. So these jobless claims is key for them to see signs of cooling down on the economy and also the labor market. This is super important and will be factored in the next decisions on March for the Fed interest rates hikes. So this is super important to understand. And also jobless claims 4-week average is a little bit lower than the previous one, but these two numbers, continuing and initial jobless claims, are quite positive. Bad news should be good news. But how the market reacted to this? So I've prepared more detailed breakdown on this price action. I'm usually taking some positions when we have this kind of economic data, and I started going long on these bounce of this previous pre-market support. I took some profits up here, and once I saw that the point of control, the most volume was at 12,712 or something like that. I held into the open. I marked this 12,700 as key support, a key pivot, and I rode it to the upside. But this candle at the open, I got chopped out here on profit, but I was expecting, honestly, quite more bullish sentiment. But be careful, because if we check the 5 minute to see how we went into the open, as you can see, this is the close yesterday, and we basically went in pre-market super long. Look at this. This is 3 in the night. This is United Kingdom session. And they basically bought the hell out of pre-market Nasdaq until almost recovering all yesterday's move, price action. If we note the volume profile, this is V-shape. So this is long liquidation. A lot of long got caught yesterday and they stopped out, but basically UK went all in trying to go higher. And even though, well, let me first show you how high we went in pre-market. So we were at the open at 1.26% in pre-market. And that was insanely high after yesterday's price action. So I was expecting some kind of pullback, of correction. Jobless claims were bullish, in my opinion, but we can just sustain this kind of price action and just go like a rocket to 13,000 or something like that. I've been saying all this time that this price action is not sustainable, it's not healthy. We need to pull back in order for other bulls to continue buying and supporting the move. That's a healthy kind of price action. But this kind of super long in pre-market usually means, I don't like that, but usually means that we have to sadly see some kind of pullback. Since the open, We open at here, and right now we are minus 1%. So we are still, note, 0.40 on the Nasdaq in the green, and the S&P is also in the green. Tesla is 5.70%. We will check that chart later. And also Microsoft and Apple are pushing. Google's still feeling the pain with the AI Bard disaster. So let's continue breaking down today's price action, because this is honestly, this is not bad because we are pulling back a bit. But as you can see, the trend is lower. There's a lot of volume. We have like three main, this is one, this is two, and this is three. We have three main, come on. We have three main points of volume, three main distributions. One is the infamous 12,700 range, which, as you can see, I was short here after the breakdown, and I took profit. Just this little move, that's enough for me to make a couple thousand. And we rejected again this pivot, and we rejected it again with the trend line again, a third time, and 12,700. 12,700 has a lot of shorts. So take that level into consideration for tomorrow or even for today, because I think today can have some surprises, because the movement today is just into the open, is just a correction of all the longs that were, I think, taking profits. And we are still in the green territory, so we are still bullish, but there's a lot of volume short up here. If we continue higher or after lunch in half an hour or something like that, we start moving or consolidating. As you can see here, we are trying to build some kind of support. If we hold this 600 and we start seeing higher lows, these shorts are going to be quite nervous. We have this point as the first resistance at 653, and then we have 700 and high of day. I think we have to think about this possibility, because today we are not minus 1% in the red as Nasdaq is doing into the open in regular trading hours. We are just correcting an incredible long and bullish pre-market, and that's good. Well, looks like we are breaking down. Let's see if we hold this dot line, purple line is prior close. This is yesterday's close down here. So we bounce off that, as you can see, quite nicely. So I think we might be able to hold this, but for sure we have to take into account the possibility of, again, a strong move after lunch and into the power hour. That's regarding Nasdaq. Let's check Tesla, because Tesla just held 200. Look at this. We just broke this level, 200. We were gapping up, and Tesla is insanely high today, 5.45. And it's the only one going all in the Nasdaq. On the other hand, Google is just, this is just a disaster. This is just a disaster. Into the open, Google is just going down and down and down and down. Right now it's consolidating at 94, blue line, daily level. This kind of previous is filling the gap, actually. Look at this. It's filling the gap on January, 19th of January. So now that Google has filled the gap, I expect some kind of bounce, but look at this volume on this candle, and also today, continuation to the downside. This volume means that there's a lot of people going out, a lot of people covering or selling, or we don't know what kind of action they are doing, if they are taking profits or they are just going out, but Google is just feeling a lot of pain due to the disaster with Bard. I think it's quite oversold, but actually the RSI is not on oversold territory. We can continue going lower perfectly. The MACD is just signaling a reversal. So I think a lot of pullbacks on here trying to go bullish again will be met by supply again, by sellers at 101 trying to break this 94 level again to target 85 maybe. But I think Google is losing the battle of the artificial intelligence with Microsoft, and some other things I think are being cooked in here. But for sure, Google is just, I mean, look at this. It's just feeling a lot of weakness, seeing a lot of weakness. XLY, consumer discretionary, on the other hand, Amazon is -1 on the day, -1%, but XLY is in green territory. Tesla is putting a lot of pressure to the upside on this consumer discretionary sector. And even though we had jobless claims higher than expected, and that's good for the Fed, I think people have still a lot of confidence and there's not a lot of fear on the economy. And recession is, I think, it's on the sidelines for now, because even though we are destroying the housing market and trying to destroy the labor market, we have a strong economy in US, and consumer spending shows that. We have not seen yet a rotation to defensive. So as you can see, utilities, staples, and healthcare, 3 defensive sectors, are still in the red. So an XLY versus XLP ratio is still in the green. So we are still in good shape. I'm quite positive after today's jobless claims that we are going to see Nasdaq, at least I think we are going to see holding. Oh, look at this. Well, market is proving me wrong. So let's see how we end up today. We just crossed. I mean, that's an insane move. Let's see if we got some kind of move of news, because you never know. There's no news. Well, I think this is a super strong move to the downside. I have this 30-minute support at 12,533 after this bottoming tails of yesterday, and the next support, potential support, is 0.40% to the downside, still 12,480 or something like that from Powell's day. And well, sometimes this happens. Let's see how we end up, but for sure this is a strong move to the downside. Strong move. Let's go now to check crude oil. Crude oil is seeing a pullback, 77 right now. I'm still bullish on crude oil. Look at this volume, lower volume on the pullbacks, and a strong move to 3 days, these bullish days. I think we can see, sadly, we can see crude oil again at 80. And this is going to have a big impact on next CPI, because energy takes a big role on that CPI. So I can remove this, and I think this is going to be strong support. So we'll have to see, because dollar is also seeing a pullback. As you can see, I'm also bullish on dollar, because I think after this earnings season, in which we had a weak, very weak dollar, a lot of people is rotating after earnings into dollar and other forex exchanges markets. So I think that's a possibility in which, instead of going to stocks or commodities due to uncertainty, I think foreign is going to refuge on the dollar again. And that I can easily see dollar again at 105, 106. We'll have to see. And finally, we will end up talking about yields. This is the 2-year yields, 1% on the day, still strong. And I think I'm bullish on yields. I think a lot of people is starting to realize that yields are going to be higher. than expected and than anticipated. And the 2-year, I think 4.6 is quite easily the next target. And for the 10-year, 3.9 is going to be to fill this gap. And I think on the terminal rates for futures interest rates in April, 4.85 is quite, I think it's quite probable also. But for sure, September is going to be higher than the 5.1. Look at this, we were 4.8 at September, and they realized, okay, bonds market realized we missed on that one, and we are right now 5.1, 5.12, and I think 5.23 is going to be the final target for the terminal rates on September this year. And bonds market is still pricing in an interest rate cut on December, 25 basis points. We'll have to see. Let's check the real quick. Yeah, okay. There's no recent news. So let me check the FOMC Fed Watch tool, in which we can see, okay, for next meeting, 22 of March, we are 93% of 25 basis points. For May, though, 72% is going for 25 again. This is after jobless claims today, 25 plus 25 on May. And finally on June, this is quite difficult to I think to try to predict, because 50% is staying flat from May 525 to June is flat. I don't think we are going back with an interest rate cut to 475. And I think people is in between 5 and a small hike of 525. This is going to be key for when we see, that's why we have to follow and to watch the bonds market. This is going to be key on this level. September and April, this is, if this goes to 520 something, bonds markets, and they will be pricing in another 25 basis points. So right now 125 is more or less done. This is on the table for sure. Another 25 to end up in 5%, it's already priced in, but we are debating if we think a third one is going to be done or not. That depends on CPI next month and on the next unemployment rate. Fed will decide if they go 5 or 525, and that's going to be super interesting for sure, because either way, 5 or 525, Nasdaq and tech stocks are going to feel real pain. Look at this. We are rejecting the 30-minute support. This is a super strong move. And now, this is when you have to realize, okay, I think there's a lot of potential to the downside today. Even though I started quite bullish today, expecting some kind of correction after strong pre-market action, I don't think this is just sellers. I think there's a lot of longs being liquidated and sellers taking that opportunity. I don't blame them. That's what you have to do. Take those opportunities. So be patient. I hope you are not caught in this strong move. The trend was to the downside, but I mean, we are just at the bottom of that trend. I expect some kind of bounce, but we'll see. Anything can happen. And today, for sure, we are going red. It's a pity. Well, it is what it is, and I hope you learned a lot while I'm trying to explain everything I see and everything I know. Thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel. Support the channel, support my effort and the videos I shared with you. I'm super glad that you are enjoying those videos, and please continue supporting the channel because that will help me providing you with more videos and more content on these markets, on the Nasdaq. So remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time, but remember the trading day is not over yet. We continue drilling down. So this is just a knife. So don't put yourself in the middle, in front of this Nasdaq bus. Nasdaq has a lot of potential and a lot of capabilities to destroy you or also make you rich. So don't be dumb and don't just go away and just don't put yourself in a bad position trying to buy this kind of dip. This move is a strong move to the downside, so be smart, see that, understand that, put your ego aside and learn about today's price action. I was wrong. I started the video saying that this trend was a correction. I expected this move, and this is what happens. Sometimes you are wrong and you have to correct. You have to realize yourself that you were in the wrong position and you just have to accept that, cut the trade, and just move on. So it is what it is. Thank you for your time. Discipline and risk management are key for success because it will control this kind of moves. Stay safe, everyone.